All right. So I am Trade Mindsoul, and this is me, everyone, educator in Trade Mindsoul, which is my name is Mr. Ide Areno. So we've actually talked about the last time we talked about two topics: who is Trade Mindsoul and understanding CDFs. Today we'll be looking at the intro to Forex and who trading the Forex market. So let's quickly go down to what we have for today. So, introduction to Forex. I know some of you have actually known the definition of Forex. First few weeks, let's say 2, 3 weeks or 2 weeks of the classes are these things. This might be theory, but this might be foundations to what we're going to learn later on as we proceed. But everything we're going to do here is a step at a time. A step at a time. No rush. You will definitely get what you are winning or what you're looking for here. But you just need to follow my process. Because these things I've designed the classes that with if I teach this with process and you're actually consistent following these things. So let's proceed. So what is Forex? The word Forex is an abbreviation of two words called foreign and exchange. And this exchange is between two foreign countries. For example, if a country A imports what to the country B, or the country A will need to convert its local currency to that of country B before what initiating any transaction, or it's what vice versa. So with this definition, people you who used to see forex as some scam are wrong because the word forex is nothing to do with anything scam. The word forex is foreign exchange. It just abbreviated into what? Two words called foreign and what? Exchange. I repeat, the word forex is just what? An abbreviation of two simple words. Foreign exchange. Foreign exchange. I repeat, foreign and what? Exchange. So this is a transaction between what? Two or more countries that are foreign. Between, like, for instance, Nigeria is a foreign country to what? To United States. United States is a foreign country to what? To Italy. Now, these countries, the world needs countries to survive. Nigeria needs raw materials. We import, we export. We export crude. That, I think that's the basic thing, the only thing we actually export. We export our copper. They said it was a bit better, but we don't we have much, but it's more of our oil that we're using that we're doing more of exportation. So these transactions are done globally. As I repeat, each and every day within 24 hours, there are transactions between what? Two foreign countries. That is why the forex market can never collapse. Because what? The forex market is what? An exchange between foreign countries. And one country, even China, that are claiming independence as a nation, they still import things to other countries and they still export. The other countries import to China and China exports to other countries. No country in this world can simply stay alone without needing another country goods and services. So this exchange also could be goods and services. The first name is a general term because it means what? Foreign exchange. I repeat, the first is a general term, but foreign exchange. With this, I'll really go to where we have you guys, and I'll try to unmute. So, what do we do in the forex market? We only buy and we only sell. These are the two. See, let me tell you, this full world, everybody buy and sell. Everybody, even if you are not a business person, you do buying and selling. And again, even if you're not trading in the forex market is either what affecting you. So it's definitely you. If you're actually not trading the forex market, I will explain. The forex market is also buying or selling with you or with your future, negatively or positively. It is affecting you. Now let me explain. Now with the name foreign exchange, your government, which will go, who trades forex. I was supposed to talk about it, but let me throw more light to it and then come back to what do you do in the forex market. Your government trades forex, and they pass through these forex markets to do their transactions, to do their exchange of goods and services. So, for instance, if this country's economy is not doing well, right? If your government is selling a certain commodity there, they will definitely be on loss. And what's happening to you? You are also on loss on your currency. And your currency will definitely be what? Devalued over other what? Foreign currencies. So you are affected whether you are not trading or trading. That is why you need to make sure. They say there's a regular saying that if you cannot be there, what do you need to do? You need to what? You join them. So the forex market is trading you without you pressing a buy or a sell button. And everything we do in this life is exchange. Before before you were giving birth, there was a reason why you came to this earth. There was a transaction, and what was that transaction? God brought you to this earth for a certain purpose to fulfill in what in this earth. So what He gave you here to fulfill. So there was a transaction. Your parents, before they send you to school, there was what a transaction. Before you came to these classes or this class, there was a transaction. Everything involves transaction. Everything involves transaction. Why do you sleep? There is a certain transaction that happened. You are tired. You need to sleep for what? To regain your strength. So that's a transaction. So if you look at it logically, we are doing buying and selling in a certain perspective, whether you're not pressing buy or sell or saying you're changing money for something for a good, there must be a transaction. Everything we do, there is a transaction involved. But in the forex market here, our transaction that we carry out is either we are buying or we are selling. Buying and selling is an exchange that we are doing. It's either we are taking money or like I used to, if this is Calista is in the office, I'll say, man, what do you like to do in the market? I think she can explain it right. So for instance, basically Calista has money and she goes to the market. She has money, she needs rice. She needs to buy rice. The person who is with the rice needs to get cash. There is what? A transaction. And that is what? Buying and what? Selling. So in logical sense, the person with rice is what? Selling his rice to buy currency. Why in another angle, you with money is what? Selling your money to buy what? The rice. In the forex market, we buy currency A to sell currency B on the what? On the currency market because we'll still look into some other underlying assets later on. So we only buy in the forex market, we buy and sell, we just buy and just sell in the forex market. And there is competition between these two things because of what we call demand and supply. I repeat, demand and supply. Most of you now be like, demand and supply has entered here. If you played with your economy in secondary school or whether in university you didn't actually do economics, you will definitely visit it here in forex market. I was once like you where I was playing with the whole basis of economics. And funny enough, it's here I actually learned most of the things I do, most of the economic stuff I do. It's here I learned it. And I will teach you guys. It's simple as ABCD. In short, I love economics. I wish I went into that field. I went into either really accounting, um, computer science, maths and stats. These fields are like my calling because that's basically what I'm actually doing for life. For life. So I'm still on what do we do in the forex market? We've already known. So demand and supply was what made me to start talking. I like talking. I'm a teacher, and this is why I like talking. So demand and supply always fight tug of war. Always are in tug of war. So with the logic demand, I hope you guys are with your notepad and you guys are taking note of some certain key stuff I'm actually saying. Sometimes I might sound funny. This is my personality. I'm always 99% playful and 1% serious. So filter the 99% and focus on the 1%. That's when you get to understand me. Or sometimes focus on the 99% and filter the 1%. And then that's where you also see the understanding. So demand and supply is what we actually look into when we are trading forex. So if demand is high with basic elementary economics, we know that prices will increase. If supply is high more than demand, prices will what reduce. So this forex market, when we're buying, is based on maybe for instance, we're buying a certain currency in the sense that this currency is on demand and this other currency is on supply. So we sell and buy here to make profits because as the currency is on increase or on demand, if the prices that we buy increase, just like if you go in to buy Bitcoin, I don't know if you guys have actually bought any cryptocurrency and you put it to your wallet. If those prices increase at the point where you bought, you are in profit. But if, for instance, those prices did not increase, so because of the two things we do in this market, and there's a competition between demand and supply, and demand is on buy. When you buy, it means the market is on demand. When you sell, the market is on supply. More sales are supply, more buys are what? Demand. So because of this talk of war between buying and selling, that one want to overshadow the other one. Because if, for instance, bears are for sales, bulls are for buy. So we fight a tug of war between bulls and bears. So let's say we put the two animals together. The bull animal is here and the bear animal is here, and they want to attack themselves. The bull animal will be what? Will be what? Attacking upwards with his horn, while the bears will be attacking downwards until one of them what will kill, or two of them will kill themselves. Anyone that kill themselves, the market will actually show that this person has killed himself. So one person must die between the bull or the bear. So when you're in the forex market, you're in a competition between demand and what? Supply. So, but then I'll teach you how to know that the bull will win, or the bears will win, or the sales will win, or the buys will win. But these are what process. Like I said, it is a step at a time. Let's So who trades forex? A quick one. So there are basically three categories here in forex market, and these are what the commercials. And you are saying 4 year, but then it's three because the commercials are the commercial banks and also the government are also commercials and all those stuffs there. So, but then I just separated them because of some questions will come in and all. So the commercials. So what are the commercials? They are like the commercial banks, such as like an example, Central Bank of Nigeria, and we have banks, other banks like First Bank and all. They trade forex. They go into the forex market to do. their exchange prices. Like for instance, if you walk into any of your bank, a bank with like Access Bank, Fidelity, name it, if you walk in, you will definitely see a place whereby these banks are giving you the exchange rate between this social currency, euro to naira, or this social currency. And then the central bank or the bank in charge of monetary policies and fiscal policies in a certain country. No, sorry, the central bank is in charge of fiscal policies, while the government is actually in charge. Monetary policies, while the government is actually in charge of fiscal policies. So the bank that are in charge of the monetary policies, they use this moment, they put in these monetary policies through with the forex market. That means they look into the inflation and how they can actually regulate the interest rates with the forex market. So everybody trades forex. I think I'm having this. Okay, I'm still in. So everybody, every single person in every single person actually trades forex. The commercial bank, the financial institutional banks, they trade forex. So let's go into the government. Now, the government use the forex market to carry out transactions like exportation and importation. So, for instance, your government wants to import or export, they are definitely going to convert their currency from one currency to another currency before they want to carry out their transactions. So they do that with the forex market. But you see, the other category is where we get to talk about the large speculators. And what are the large speculators? These are for large companies. They are second, and because they have the deep pocket, they are called the large speculators. And there are companies such as BNB company, Coca-Cola company, and rest. They are also known as the hedgers in the forex market. For instance, if they want to import, they definitely go into the forex market to actually have a certain price that certain exchange price that they will say, okay, we want this exchange price to be like this, so that in the next 2 to 3 years that we want to actually do this exportation, we can actually what have this exchange price. So we go before speculate at the second. So, for instance, for that on production getting what paying us right in terms of so the expectation, so that actually push and also what they need to pay their staff because so like company like Coca-Cola, company like MB, company like Toyota and the rest of they don't just have one branch in a certain country. They have different locations and all cut across some of them all over the country, just like Coca-Cola. Coca-Cola company is so large and big that it is what spread across all almost 180 countries in the world. So these people will pay their staffs in Uganda, in Nigeria, and then definitely they will pay their staffs in Naira. If it's in Nigeria, they will pay their staff in think parcel, something like that in Uganda, in Mali, there, and thereabouts. So the smart speculators are retail traders that, like me and you, we don't have that large volume to trade the forex market. So we need the forex market to we pass through a broker and we'll be learning what they call brokers later on as we proceed. So all right, guys, I think this is just the two topics we're going to talk about today. All right, bye bye.